Hello, everyone, and welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. And before I get into today's video, I just want to say disclaimer, not a financial advisor. Nothing on this video constitute as advice, just my thoughts on what's happening. So let's get into today's news. I found this very interesting. In terms of the markets, where's the share button? As I said, this is an election year, so they're going to do whatever it takes to prop up these markets. They were down today, and then they finished high again. So look at it, up 69. The weird thing is the Dow Jones hasn't been able to break that 40,000 point. So if you look at that, it's been 40,000, hasn't been able to, but it's up today. And nothing really special, no data. Gold's up today. Gold, recovered half of its loss. No, I don't think half. I doubt we read that on Peter Schiff, but I think that's just more short covering. I don't know. But let's get into what I was thinking about is credit card bubble. This is the one that I wanted to show you. Credit card delinquencies are rising. Here's what to do. It's highlighted so you can see it right here. Credit card delinquencies are rising. Here's what you do. Seriously overdue credit card debt is the highest level in more than a decade, and people 35 and under are struggling more than any other age group to pay their bills. So that's the first thing. The share of credit card debt that's severely delinquent, defined as being more than 90 days overdue, rose over 10% during the first quarter of 2024, and that's Federal Reserve Bank of New York. So that's the first thing. And you can tell this isn't an old article. This was June 8th, which was 2 days ago. So, and then this one thing that really caught my eye, I was reading something. It says the broad continuing rise in US credit card debt delinquency. This is May 14th, so it's not that old. So here it is. I'm just gonna look over. We highlight the increase in US credit card delinquencies uh, have continued while indecisive varies. Rising delinquency is pervasive across geographies and different metrics. So here it is. Credit card accounts delinquent if payments are 30 days or late. We look at two variables: percentage of people in delinquency, percentage of debt in delinquency. Uh, uh, we divide US zip codes into deciles based on aggregate gross income derived from IRS individual income tax. Calculator. To better understand the broadness surge, we display data for the US, the Federal Reserve's 8th district, the richest 10% of the zip codes, and the poorest 10%. Growing share of individuals in credit card delinquency. It's worth noting that delinquency in population exams show an increase in the last 8 to 11 quarters. And then let me just go on. Furthermore, in the first quarter of 2024, US 8 district posted and the poorest 10% of zip codes were 94.8, 93.7, 93.6. So percentage of people with delinquent credit card debt continues to rise. So let's see, richest 10%. Look at that right there. Richest 10% of zip codes, it's still rising. Poorest 10, it's rising. And then 8th district in the US. So you can even see, look at this. The richest 10% is still rising. So the richest 10% of zip codes have experienced the greatest proportional increase, and their delinquency rate climbed from 4.8% in the second quarter of 2020 to 7.4% to the first quarter of 2024. 54% in relative terms. Percentage of debt, credit card debt that is delinquent continues climbing. So see richest 10%, this right here, boom. So you can tell, so yeah, just showing you that it's not just the poor that's being punished. I hear a lot of dumb things within the gold space, like the economy's bifurcated. Well, if you look at this, the richest 10% right here, the richest 10% of zip codes have experienced the greatest proportional increase of their delinquency rates. Doesn't sound bifurcated to me. The reality is they want to, just suck up to the mainstream narrative, but be independent. But the reality is this economy is hurting everyone. If you look at it, it hurt the poor the most first, but it's clearly hitting the rich too. The economy is not bifurcated, it's just bad. And if you look at it, this is one thing that the markets have not priced in. But if you look at it, it will be eventually ended. They're eventually going to uh if you look at it, eventually it's gonna matter and it's gonna hurt the markets and banks are gonna have these losses. So I told you yesterday was the commercial real estate, the credit card, and I'll try to do some stuff on auto loans. But anyway, that's all. Like that video, hit that like button, subscribe, and I will see you next video.